Hello everyone, I'm CMA Banapriya. I'll be teaching the subject SPMBV for CMA final. Um, Now let's begin with the chapter Mergers and Acquisition. This chapter, from an examination point of view, is quite an important chapter because average it covers around 24 to 30 marks in each and every attempt. Um, Less than 20, easily to 14 marks you can expect apart from the MCQs. So, and it is very, very easy to understand and score. So, let us now dive into the chapter. So, mergers and acquisitions. Are these terms one another the same or are they different? What is merger? What is acquisition? Merger is, say, there are two companies A and B, and these two companies merge into a new entity. They give birth to a new entity. So the old Munadi in the A and B, they don't exist now. The company AB continues to exist. This is called merger. Acquisition is when, say, there's a small company and there's a big company. And the small company, the control and the shareholding of the small company is being taken over by the big company. Now the small company is part of the big company. Then you call it as an acquisition. So this is the basic difference between the merger and the acquisition. So what are the reasons why it is happening? What are the benefits that you can derive out of a mergers and acquisition? As we've already studied in SFM, diversification helps us in reduction of risks in a particular security. Adhe Mari, business under mergers and acquisition, it helps to diversify the business risk because when we confine our business to a particular single industry, then the beta of then the risk will get restricted to that particular industry. The risk may be higher, but when we diversify our business, the risk will get reduced. Due to which and also the market expansion will also be there because in order to begin the business from scratch in a new industry, say for example, I belong to an automobile industry and I would like to start a business in the clothing industry. It's quite difficult to start from the scratch to build a new project in every other industry that you want to develop from that you want to venture into. So it will be easier if we can merge with the entities which where already they're running business. They are carrying on business in other industries as well. No, it'll be easier for us to merge with those entities and we can expand our business, due to which our market share will also increase. As we expand our business in different industries, in different sectors, it'll help us to increase our market share. And the basic, the most important part of the mergers and acquisition is synergy. What is synergy? Generally, we all know 1 plus 1 is 2. But under mergers and acquisition, 1 plus 1 is never 2. 1 plus 1 will always be greater than 2. How? Because say I am a company, I am making profits, I'm earning or I'm having an earnings of rupees 2. And there's another company that is also earning, that company is having an earnings of 3. If we merge together, the expectation out of a merger is to have a combined earnings of more than 5. 3 plus 2 is 5. But if it is going to remain the same, there's no point in the merger or acquisition. So it is expected to have better earnings, increased earnings, more than 5. So this synergy means the excess earnings, the extra earnings that you get out of a merger or acquisition. The merger can be out of increase, can be seen from a perspective of revenue, which can be increased in the profit, earnings, or market value. Another perspective can be cost reduction. So a merger or an acquisition can lead to or contribute in reduction of cost. And tax benefits. There are a lot of tax benefits with respect to mergers and acquisition because say there's a loss-making company, it is getting merged with a profit-making company. Then the losses, the accumulated losses, the unabsorbed depreciation can be carry forward to the merged company or the amalgamated company. And the expenditure solely and exclusively for the incurred for the purpose of amalgamation can be written off over a period of time. So there are multiple advantages and tax benefits available with respect to mergers and acquisition. And access to new technology. A company, say there's a company and they don't have much access to latest technologies and equipments. So that company may merge with another company which has access to all the latest technology, and this will such merger will help in increase will help in the growth of the company, will help in the improvement in the functioning of the company. So these are the basic advantages that you get, that you that you can see under mergers and acquisition. Now, there are types of merger and other theory part with respect to the mergers and acquisition, but I would like to shift the focus slightly to the numerical part in order to understand the meaning of synergy. So, as I already mentioned on the few points earlier, that 1 plus 1 is not equal to 2. It will be more than 2. Why so? What is the meaning? So now let us understand this concept by a small example through numbers. Now, while approaching the problems in the future, well, we'll be solving a lot of problems. While solving those problems, it will be easier for us if we can bifurcate the information. While looking at the question, try bifurcating the information with whether, to what category this point belongs to. Say, the market value of the merged company means this information pertains to the post-acquisition, post-merger. So, and the market value, in this example, there's a market value of the big company, which is 50 lakhs. And the market value of the small company is 20 lakhs. And the market value of the merged company is 80 lakhs. This is post-merger. This is the combined market value of the merged company, that is big plus small. After merger, the market value of the company has become 80 lakhs. But this is post-merger information. What is the pre-merger information? The market value of the big company is 50 lakhs. Market value of the small company is 20 lakhs. These are the individual information. And for this merger or acquisition, the purchase consideration is 24 lakhs. So now let us understand the term synergy with the help of this example. So the market value of the merged company post-merger has become 80 lakhs. But the market value of the individual companies were 50 lakhs and 20 lakhs. So what will come to our mind? 50 plus 20 is 70. But in this case, the market value is being given as 80 lakhs. So the market value has been increased by 10 lakh due to this merger. It was not just 50 plus 20, 70. It has become 80. So the excess 10 lakh, the increase in the market value of rupees 10 lakh is said to be the synergy. That is the gain benefit due to the merger. But is the 10 lakh fully, the synergy, we found the synergy is 10 lakh. Is the entire 10 lakh is the gain out of the merger? Then we have to think about few other points, which is, say, what is the cost for the merger? Are there any cost involved? Have we incurred any other extra cost for this merger? From the perspective of the purchasing company, say, for example, you're going to the market. I'm buying an apple. The apple is worth rupees 10 rupees, worth rupees 10. But I pay rupees 13 for the apple. What is the extra cost that I've incurred in order to buy that apple, which is rupees 3? So the extra cost, the acquisition premium, which I have paid for the purchase of apple is rupees 3. That is the extra cost I've incurred. From the perspective of the buyer, what is the perspective from what is the seller? What will be the seller's perspective in the same scenario? It is a gain of 3 rupees. Clear? Because for Apple, which is worth rupees 10, he has received rupees 30. So for the opponent person, it is the gain of rupees 3. So the cost for the buyer will be the gain for the seller. The same concept is also applicable here. The purchase consideration for this mergers or acquisition has been given as 24 lakhs. But the value of the company is just 20 lakhs. I have paid extra 4 lakhs for this acquisition of merger. So that is the premium that I have paid for this acquisition. That is the cost of the merger. What is the benefit? Net benefit. We can, yes, net benefit. What is the net benefit of the merger? I have gained a synergy of 10 lakh, which we already discussed now. This gain of 10 lakh, adu poga, we spent extra 4 lakh for this merger. 20 lakhs worth company ki I paid 24 lakh, which means I have paid extra 4 lakh. So I got an earnings of 10 lakh and I paid rupees 4 lakh. So the net gain, the net benefit of the merger is rupees 6 lakh. And this acquiree gain, so forgot to mention this. Acquirer is the one who is buying the company. Acquiree is the seller. So the acquirer, from the acquirer perspective, we saw the cost and the benefit. From the acquiree perspective, which I mentioned in the Apple example I mentioned, right? The seller received extra rupees 3. The seller earned 13 rupees in total. For a 10 rupees worth Apple, he received 13 rupees as a consideration. So this 13 rupees, so the gain of 3 rupees is the seller's gain. In the same way, for the target company, the acquiree company can also be named as target company. The gain of the acquiree or the target company is the purchase consideration that they received, which is 24 lakhs minus the market value of the target company is only 20 lakh, but they received 24 lakh in space of 20 lakh. So the 4 lakh is the gain that the acquiring company is earning. While talking about the consideration, there can be different modes of consideration, which is it can be issued as shares, it can be issued as cash. So consideration can be in 2 forms, which is cash and shares issued. If the consideration is through cash, in the question, from an exam perspective, in the question, it will be clearly given as whether the consideration is made through cash or the consideration is made through shares. So if the shares are issued, how to determine the consideration? Then there comes a new term called swap or exchange ratio. What is this swap or exchange ratio? Basically, this swap or exchange ratio can be calculated through different methods or measures, per se, measures. And it will also be given in the question. It can be through EPS, it can be through MPS. So it can be through any other measure, and it will be clearly given in the question. Say, for example, in this case, we are taking EPS. So the EPS of the acquirer, say it is rupees 10. And the EPS of the acquiree, say it is rupees 6. And shares of, acquirer and acquiree. This is the number of shares. Number of shares, say we have 10,000 equity shares of rupees 10. And for the acquiry, it is 5,000 equity shares, rupees 10. So, what is the swap ratio? Swap ratio is the number of shares that the acquirer will be issuing to the acquiree as a part of consideration. So, as I already mentioned, the consideration shall be in the form of cash. For this, an example would be the consideration for this merger is rupees 90 for the shares held, 90 per share for the entire number of shares held. It will be 90 per share. It will be directly given. But in case of shares issued, it can be given in, we'll be asked to find the swap ratio. What is the swap ratio? It is the number of shares that the acquirer will be issuing to the acquiree as a part of a consideration. How do I determine the swap ratio? So the swap ratio is, say, in this example, we are taking EPS. It will be EPS of the acquiree divided by the EPS of acquirer. This is the swap ratio. In this question, the EPS of the acquiree is 6. The EPS of the acquirer is 10. So 6 divided by 10. Probably we can make it into a point. This would be the swap ratio. How do we determine the number of shares that I'll be issuing, that the acquirer will be issuing to the acquiree? The number of shares already the acquiree holds. The acquiree has So existing number of shares of the acquiree is 5,000, right? 5,000 into the number of the swap ratio, which is 6 by 10, which means basically 5,000 into 6 is basically the earnings of the acquiree, right? Total earnings, EPS into number of shares, which you've already studied in FM. The EPS per share into total number of shares, it is the earnings of the acquiree, existing earnings of the acquiree, right? Which is rupees 3,000 or 30,000. Now, the earnings of the acquirers is rupees 10. Earning per share of the acquirer is rupees 10. Then what will be the number of shares that the acquiree will receive is 1,000. So the acquiree will be receiving 3,000 shares as consideration. 3,000 shares of rupees 10 each. That will be the consideration that the acquiree will be receiving from the acquirer. Moving forward, we'll be looking into a lot of other terms, which we might have already, we have already studied in SFM, which would be P ratio, calculation of MPS, calculation of EPS, and post-merger or pre-merger EPS. Again, as we already mentioned, swap ratio, and what else? So these are the terms that we'll be learning going forward. So this is just a basic introduction that I gave for the, the basic introduction for the mergers and acquisition. In the upcoming classes, we'll be learning and we'll go deep into the topic mergers and acquisition.